Hey, I'm Zachary Hogan from the DFW Trade House, and with this video we're going to be taking a look at the US dollar Canadian. We do have our standard risk disclaimer. You can start trading with us very easily. Now we're going to go ahead and switch over to Forex Factory here, and what we're going to be taking a look at is the Bank of Canada monetary policy, the interest rate decision that we have coming out at 10 a.m. Eastern on Wednesday, October 25th. Now, this is going to be happening in just under 13 hours at the time that I'm filming this video, and we can see it's forecasted to come out at 1%. So this is basically the lending rate on what the banks are charging in interest. You can expand here on Forex Factory, get some more information, and I've already gone ahead and back tested just to really save a lot of time on this recording. Now, if you wanted to take a look at these white dots, it basically is all of the last interest rates from 2016 to 2017. And what we're going to do is we're going to switch over to a clean chart just so that there's no confusion. We're going to do a top-down analysis, and we're really going to see what we could expect for the US dollar Canadian from right now heading towards the end of the market close Friday this week. So we're here on the weekly chart just to get a big picture overview. We do have a 200 exponential moving average. So for those of you who are new traders, you don't necessarily know what a moving average does. It essentially calculates the average traded price over a certain period of time. So in this instance, over the last 200 weeks, we can see that we did just get a big push off of the 200 last week, and we are currently having some more bullish momentum. And if we were to come back to the daily chart now, we can see that there is a little bit of space between that 200-day average traded price and where price is right now. So what we're going to do is we're going to draw a few different confirmations on our chart so we get a better idea of what can happen. We're going to start with a Fibonacci, and we are also going to consider some areas of supply and demand. Now, there are a few things to keep in mind. The first being we're trading at 1.26800 right now. We are right below that major quarter level of 1.27. So if I were to go ahead, I will plot that up just with the price level really quick so that we can see it. And I'm going to turn off the name. But you can see that we are trading just below that 1.27 major quarter. It's lining up with our 38.2 Fibonacci, and on the daily we are having a lot of bullish momentum. We're getting some higher highs considering what happened here, and really I would be expecting this bullish momentum to continue at least until after the news release at 10 a.m. Eastern Wednesday morning. Now, one thing that we can really pay attention to is this candlestick that happened on October 20th. You can see we were kind of consolidating, trading around the 23.6, and then we had a very large movement. This was about 120 pips. I will verify that really quick. Yeah, so a little bit more. It was about 135 pips from where we had all of this trading activity on this day. And with us being below the 200 exponential moving average, it's very clear that there's more supply to the upside. We can see that by just taking a look at the past data. This is backtesting, really. With trading, there's always that element of risk where you're not going to have 100% certainty. You need to establish a bias, and that's what we're doing. So we're going to be using all of this to determine where price could go next. Taking a look at this chart, there is a lot of activity and a lot of interest up towards these higher levels. It is coinciding with our 200 exponential moving average. We can notice as well that right where this low point was, it does line up with our 23.6 where we got the big push away from. This was a clear demand area over here as well. We were downtrending since the beginning of the 2016 year. We hit this low at the 125 level, and then immediately we moved up for over 650 pips to the 1.315 zone. So this is a very important level, and we can see that we did create a lower low. We almost got down to that 1.2. And right now we are at a turning point where we could see price push up perhaps above this 200 exponential moving average once more, but I'm not expecting that by the end of this week. Realistically speaking, I could see price trading between now and the end of the year between the 128.5 to the 125 area. And this is really to do with the lunar cycles. We're not going to be talking about that in this video. But with where price is right now, I would not be surprised to see one of two things happen. We could see the bullish momentum continue into London, and then at that time, we could see if price is trading up around the 127,300 level. I would expect price to really just continue to the downside, come back down at the release of the news. Now, I'm not expecting the interest rate to change. It's forecasted at 1%. I do believe that they're going to keep the rate at 1%. But really, when we're looking at this, I'm going to draw up a few other things that can help us determine our bias, and then we're going to go ahead and actually plan a position. Now, if you choose to trade this, keep in mind it is at your own risk. This is not something that is guaranteed, as I mentioned, but this would be the area that I would be looking at. There is a lot of confluence in here. It is something in the past that has been proven to act as both supply, or the more common term, resistance, and of course, we have our support or demand zone as well. It is one of those interchangeable things. We can see that. We are looking for the large movements through and away from the zone. And really, with right now, this is the most relevant and recent price area. And I would not be surprised, as I mentioned, to see the bullish momentum continue. If I were to be planning a position for what I would be looking to do, I mean, really, I'm going to be on the charts when this news release happens. I've been able to schedule my days so that I can do that. But right now, my target is going to be the 128,200 level. It's around the top of our zone. From where price is right now, we're looking at about 140 pips away. So we have a ideal target in mind, but where exactly are we looking to enter? We have to determine what the best possible price for us, as well as the risk that we're willing to take for this trade would be. Myself personally, I would not be looking to have a stop loss beyond the low of this candle. So that would basically be putting us at the 126,100 level, just to put it on here for reference. If we were to enter a market execution, that would be a 70 pip stop loss. That's fairly large. That would put our trade at a 2-to-1 risk reward ratio, and I'm not looking for something like that. Myself, I prefer anything 3-to-1 or greater. You can have trades that are very, very well you know, weighted when it comes to your risk reward. And for something like this, realistically speaking, if we do see some bearish movement in London session, I would expect price to come down anywhere between the 126,400 and 126,500 level, maybe even a little bit lower. We're going to go ahead and just draw one other price zone on here so that we can have a visual. But anywhere in between right here, I'll put a text note on the screen. Ideal buy limits between 126,350 and 126,500. On the broker I trade with, the US dollar Canadian at this exact moment, let's check out what the spread is real quick. The spread is 1.3 pips. So you really need to consider that too, because you could put a buy limit in and it could technically get down to that price. But if you didn't account for the spread that your brokerage has, you may or may not get filled. That also is the same to be said for your stop loss. So if I were to be personally entering this trade, my buy limit would be at the 1.2646, and that would put me at a 36 pip stop loss to a 140, or actually I guess it would be a little bit more because of the buy limit. So from our buy limit to the target, it'd be about 180 pips. So 180 pip target, let's just for the ease of this calculation, 40 pip stop loss, we're looking at a 4.5 risk to reward ratio. So that's pretty good in my opinion. This was a trade I was already in. I had collected some partial profits on it. My original entry on the buy for the US dollar Canadian was 1.26391. If I were still in that position, it would be up about 50 pips right now. But really my bias for this entire week on this currency pair has been bullish. We can go and we can take a quick look at the dollar index, and really we're seeing that same bullish price action. If I were to extend this trend line that I had, you can see there's a lot of confluence right here to the upside at 23.6 fib, our 200 exponential moving average. We did get a reversal pattern right at the 38.2 that I have drawn up, and all of my confirmations are drawn on the daily or higher, simply because I'm looking at the bigger picture. And when it comes to the intraday style of trading, if we go and if we look at the US dollar Canadian once more, we can see just exactly how we've been trading away from that same zone. Like I mentioned, creating a higher high from over here, and really right now we're trading just at the top of what happened right here on this would have been August 17th. And I mean, really it does look like we made a higher high, just by a little bit. We wicked, not quite up to that 1.27 level just yet. So we're gonna have to see what happens through London. It wouldn't surprise me to see price come down, fill on the buy limit, and then continue to the upside. Just to give one more visual representation, this is something that I don't normally do too much of with the price projection, because obviously anything can happen. However, we're going to go ahead, we're going to do it. We could see price do something like this, and then duplicate this trend line one more time. So we could see the market do something like that if it's going to be filling us on the buy limit. Now, we have to also consider the interest rates are typically priced into the market. So this is really going to be dependent on how the traders interpret what is being said at the press conference and the actual statement itself. The press conference happens at 11:15, so an hour and 15 minutes after the interest rate decision itself, and really we're gonna just have to see what happens on the US dollar Canadian currency. This news will affect any pair that has the Canadian dollar, the Euro CAD, for example. We're not going to analyze it, but this is something that will also move anything that has the CAD. So just pay attention if you're in any positions. Make sure that you are prepared for a potential large move, because these type of fundamentals are really the excuse that the dealers and the big players in the market use to shift price in between the different levels. And seeing how we're trading right below this major quarter, it would not surprise me to see price gain even more momentum, and I would expect us to close the trading day around the 1.27500 level. That would put our buy limit in about 100 pips of profit, and really that is just my speculation. As stated at the beginning of the video, trading involves risk. Make sure that you take responsibility for your own decisions. You can feel free to reach out to us. Check out the DFW Trade House page, and really just make sure that you get plugged in. Subscribe to us on YouTube here. Make sure that you like us on Facebook, and really ask your questions, because that is the biggest thing that's going to help you have a trading breakthrough and evolve into a more confident person all around. Thank you for your time, and enjoy your trading for this week.